The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 24th day of July. My pleasure to be here, noon to 1 p.m. for the Tiger Technicians Hour. Fortunately, I had a session this morning at 10 o'clock with Tommy Jr. We had a real nice time talking about all these different aspects of the market. Hey, the Dow is up 215, 217, and it's in that leg D that we were looking for. So we had a long position and we got taken out because I said if it breaks above breaks above the peak C high, we're going to raise the stop, which we did. So we took a small profit. I would have liked actually to have still been long, but now I have to start thinking about what do we do next. So here we go. Dow in leg D, above the 25,215 peak C in the Chapman wave methodology. Oh, and if I can find it quick enough here. Yes, I've got it right here. I want to just show you, for those of you who are perhaps new and listening to me either for the first time or just not really used to the Chapman wave methodology, the core of it is absolutely simple. This is what I discovered years ago. Try to identify and recognize a trough of importance after a pullback, and then merely start counting each successively higher peak, alphabetically, uppercase on the way up, lowercase on the way down. Troughs, we call them on the way down. And at the fourth highest peak, that's where other things can happen. It can go higher. It can go to E, F, and G. It can recycle and have a whole brand new buy mode to an E. That's not the issue. The issue is to get you from a low. Preferably, you're able to do that and go to a peak D, and that's where you can make other decisions. There are other techniques that take over at that time. Good. Let's get out of that. So what have we done? We went to peak D on the 12th of June at 25,402 and had a rather deep pullback to the 23,997 level on the 28th of June, turned around, and now we're starting leg D. There's a left side, right side price time match. The price time match is not the one that I love, which is going to the trough or the peak within the cup or an arch formation. In this case, we've had to move it to the right because there's no way it already surpassed in time what would have been an exact trough in that trough D right there on the 28th of June. So there are other candles that we choose, there are other techniques that I use, and that takes us to tomorrow. I could squeeze it to the next day. So it's either Wednesday or Thursday. 25,402 could be hit if we continue rallying in this leg. Okay. The weekly chart hasn't yet made a leg D above 25,402. We'll see if it's going to do that. There's a chance with the MACD China's cross positive that we could do that. Then we've got to look at other things. Right. S&P has already gone to a peak D, and in fact, it's just it is gapped up to a leg E in the daily chart, and a leg D is extended in the weekly chart, which says that the 2872s is viable. But we've often seen over the past couple of years that sometimes rallying towards the left side peak, you can fail just under it. Watching it so far, the technicals are very good. Levels to watch, 2816 kind of support. Takes that out, you could go lower. And 28, I'd say 2829 to 2831 is really going to be important. The higher we go above this peak D, of 2818, the better it is. All right, QQQ. NDX 100 had a Google spike, and it's at 180.81, went to 126. Another leg E. I've drawn in a trend line. It went above that. It's now at that as resistance. It's got a rising wedge formation. Watching this closely. Why? Because at other times at D and E, especially this was a D, but now we've gone to an E. D on the 20th of June has gone to an E. It could, in fact, recycle. A whole bunch of things can happen. This is where I have to take a real good look to see whether or not subscribers, if we're going to go short here or add to short positions or stay long. That's the whole thing. IWM is not acting as well. Look, it's down 84 cents. Had a real nice candle to the upside. And then all of a sudden, what does it do? It fails and is now testing the 14-period exponential moving average under the 9 EMA. The Russell 2000 struggling. And this rotation through the different sectors is exactly what we've been discussing for a long time. Reason why in the Dow stocks, we have a UTX, which has gone to that leg. Let me just show you UTX. Was at a peak C. Earnings come out today, kind of rallies early in the morning sharply up 3.5, and then it gives it all, not all, it gives it back, about $1.50 back. And then what does it do? It goes from 128.30 this morning, we're in at 119, in the 119s, and it spirals to 134. It's at 133.75 right now. And that really improves the weekly chart. Wow, what a dichotomous market. How do you deal with United Technologies acting so well, and then some of the other stocks in the Dow acting not as well? This is bifurcated for sure. United Technologies. All right, let's go to the we did IWM, down the Qs. Now let me show you something interesting here. Gold is struggling to try to come back to at least some kind of a positive. Is -1 right now, 1224.7. This little pattern right here can often turn into a very powerful move to the upside. Speed is your friend. And unless gold trading at 1224.70 is able by Friday's close, that's how quick it has to be. Tuesday, Wednesday, Thursday, starting to rally strongly. Friday, it gives you a really good clue by going over 1238, starts to hit the 1241 area. That would be the first sign to say that gold is in a retracement rally, but that rally could last a couple of weeks. Why do I say a couple of weeks? Because the dollar right now is down 6 cents at 94.57. Dollar's holding really well in the upper part of a consolidation where the weekly chart has made it a leg E, probably a peak E if there is no new high this week, new recovery high. And that's going to set in place a sideways move. It doesn't say the dollar has to break down, but it does say it gives gold the opportunity that it has to take to try to rally. Levels to watch at 94.57. If the dollar, this is the continuous contract, the index, if it goes, we're long at 90.07. It's hit 95.65. That's really for a, did I put 75? It should be 95.65. For a currency, trends last a long time. And when they go sideways, they can go sideways for a long time. So we're watching this because if it goes under 94, closes under 94, it says, uh-oh, it's kind of stuck. It's probably going to make lower lows and lower highs. It doesn't have to be deep lows, but lower lows and lower highs. If by Thursday morning at 10 o'clock to 11 o'clock Eastern time, if it's trading anywhere close to 95.20, that's really good action. All right, enough with that. Let's go to the EUR USD. This is the dollar. This is a euro dollar currency pair stuck in a range at 1.168. If it can go to 1.176, that's really good. If it breaks under 1.159, not very good at all. We've got a break coming up. The Dow's up 224, S&P's up 18. Basil Chapman, Tiger Conditions Hour. A lot of questions coming up. I'll be right back. We'll look at the conference.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
This is the Tiger Technicians Hour. I'm just finishing up a chart of CF Industries Holdings, Industries Holdings. It's a fertilizer company. Nice pop to the upside. There must have been some talk of tariffs help maybe farmers or whatever it is. Whatever is helping. It's a leg B in the daily at 44.51 up $1.24. The weekly chart was just sitting on a very important 14-period moving average support, the black line there. But now it's above, very strongly above the 9-period moving average, the green line. Yeah, I like it. I think it's looking very good. Do you buy it? Yeah, you can start a position here. You have to have a stop. I'd make the stop a little bit wider. I'd actually make it a 2-point stop just for the short term. And if it manages to get to 45.65, you can tighten that stop. That's what I'd be looking at. The other one was Mosaic, MOS. MOS is Mosaic trading weekly. It's probably going to make a leg C very soon. It's at 29.40. Gapped up as well. Leg C in the daily. I like this. I think it's also holding very well. I certainly would still keep a stop. I keep a 5% stop on this just as an initial position if you're going to start something here. Yes, good eye. Let me just continue here. The TLT is in fact up 13 cents, but way at the low end of the range. That's telling me that yields are still kind of stuck. Yields at TNX right now is trading at TNX.X. Oh, very strong leg C in the daily. A nice bounce in the weekly. Monthly is improving. It looks like higher yields are going to be coming, but I'm going to be watching this very closely because support will be around about 29.20 to 29, 2.92 to 2.90. Nice move up in the TNX, the 10-year Treasury T-note yield. Next question I had was, I was asked this at the close yesterday when I did Tom's show. I didn't see it until I'd wrapped up at XLE. XLE right now is bouncing. It's up $1.05 at 75.61. It made a peak ABC. You could call it an alternate count E. No, you cannot. This is a leg C and it's pulled back in the daily. You know what? I'm just going to say that the chart formation looks like it's range bound between the 76s. No, the 76 to 76.50, and it has to hold 73.20 support. Breaking either one of those ranges sets in place a continued trajectory in the direction of that break. So that's the way I'm going to put it right now. The weekly chart really is just stuck bouncing around the 9-period exponential moving average, about where it is right now. IYT, that's the transport. So I'm saying that transports really need to rally very strongly to be able to give me some kind of a confirmation that the Dow is going to continue higher. So right now it got repelled in the Chapman wave inside track repellent zone. It's below that in leg D, probably making a peak D, but the stochastic's still good at 91%. MACD is good. And the weekly chart just keeps bouncing around, making higher highs and higher lows. And let's see if that can continue here. And that'll help the monthly. So IYT transports, the iShares, I'm looking at this and saying, please, I want to see you go from the 192s, while earlier today it was 190, almost 196. I really want to see 198.50 to 202, somewhere in that range, because it needs to make higher highs and higher lows. That's going to be very important. I want the transports to acknowledge and to confirm a Dow, if the Dow can go to an all-time high. It's got a little way to go. Next thing I want to look at here was a question I had. Oh, XLF. XLF was up nicely before. Now it's up 15 cents. Yeah, leg D. Oh, so many Ds. Look, XLF, daily leg D, trying to pierce the resistance in the weekly chart. Good action, 28.09. MACD is good, stochastic's good. Look, Dow, INDU, leg D. Look, Cintas, leg D. And it had earnings last week on Thursday night. So Friday was huge big move. Monday was a big move, and today's another inside bar, but green. Very important. Microsoft gone to a leg E. So it's this run right here. Goes to leg E, high today of 108.82. Yeah, this is very important. And it needs to hold there. It has to hold anytime in the next 2 weeks. If it takes out 104 support, that's not good. But so far, very nice action. What else did I say? Oh, I can't even remember yet. Yes, I wanted to look at, I saw someone said something about deer. Whoa, nice move up 5 at 141. This maybe there is some talk about farm levies or tax credits. I don't know what they would do. See, this is going to be how does this work? So you have tariffs, but then you ameliorate the tariffs by having other things, or you accentuate the tariffs by adding, and all of a sudden you've got something so complex. It would have been nice if there was just one flat thing, devalue something, maybe, or whatever. This is tough stuff now, because it's hard to tell over a 2-year to 3-year period which of this is going to succeed. Some will succeed and some won't. Will the little stuff not succeed and the big stuff succeed, or is it vice versa? We don't know yet. It's really hard to tell. I think Boeing's earnings tomorrow are going to be a little bit of a clue, because if Boeing screams into the, where can I put that? Beer. If Boeing screams into the 376 or higher area, is at 358 right now, because of just phenomenal earnings and a backlog of 9 million airplanes that are being whatever it is, it's how the market perceives it. My sense is that Boeing is consolidating. It could have a bounce, but it's going to be stuck in a range between the 375s and probably the 320s for a little while to come. We'll see. Could be completely wrong. We'll watch that one very closely. The XLF, did I just do the XLF? Yes, XLF doing very nicely in leg D. I discussed that. I want to now United Parcel Service. I look outside my office window and I see these trucks going by and delivering around here all the time. So UPS up 26 cents at 112.97, way underneath the all-time high, around about 135. This is going to be very interesting. Earnings come out, I think tomorrow. I had a list somewhere. Wednesday. Grubhub, Boeing. Yep, UPS at 7 a.m. Oh, early in the morning, we're going to know. So I'm watching this. I don't see why they shouldn't have good earnings, but it's all the expenses. It's a lot going on here. What about Federal Express? FDX is up $1.14 at 237.54. ABC also in a D. No, there's a leg E to the upside. We'll see what's going to happen here. UPS has a better chart pattern at this particular point. Okay, next thing I want you to do is XAL. Didn't I do the XAL? No, I didn't. I did the transports. Let's go to the XAL. This is the ARCA airline index. Spikes up to a peak B, and now it's pulling back. This is interesting. Doesn't say too much about the airlines. Even though crude oil is pulling back, the airlines have made a pretty significant top in the monthly chart. Weekly chart is not looking too great either. At 103.90 down $1.39, this is not what you'd expect to see. I'll be right back. Basil Chapman, Dow's at 239, S&P's of 17. We'll be right back after these important messages.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So using the chart wave methodology, this is that leg D in the Dow on the left as well. I show my subscribers to my opening call every day. Very comprehensive look at the markets. And right here, it says there's about 2 bars left to try to get you 25,402. This is the Chapman wave inside wedge resistance line, the little dashed green line. And look at the daily chart on the right with the MACD so strong. On-balance volume has turned back up, and the stochastic has just turned back up at 88%. Very good. And look at that beautiful green candle for leg D. So far, so good. 120-minute chart. Look at the monster move in leg 3 to the upside. in the Chapman wave, it's leg B in the notation right there. Good. I like what I'm seeing so far. Now, I had a question about, let's do this right now, question about the lagging. So the IWM is a little issue here, but I have to also look at, so this is the IWM, once again, it was down 0.86 before, now it's down $1.14, and the SMHs, and the question was, is this a perfect time to short the semiconductors? I don't know if the person who sent that to me has already done that. Let me just have a look here. Yes, I would say that on a day with the Dow's up 230, S&P's up 17, and the semiconductor ETF, the SMH, is down 24 cents at 106.35. Yes, but what I would be looking for, this doesn't have to go to a D. What I would be looking for is that if you're short, and I suspect you are short already because that's the way it was phrased. Well, how's it phrased? It's phrased. Market up and SMH falling quickly, yes. So let me just get the perfect short, not even a question mark or a statement, just perfect short, Kevin. Kevin, I think you've been looking at this. If you are already short, it's real easy. I would put a stop. One stop would be, it's at 106.38. If you're using the SMHs, I put one stop at 106, about 97, just a little small, because if it really has a bounce, it could go to a D under the circumstances that we're looking at. I think you're correct. The MACD is good, but not great. Stochastic's pulling back at 90% in starting a position. I wouldn't call that the position. So as a starter position, yes. If it's a starter position, then what I would say is you have to give it room. If you're shorting anywhere, so the high today is 107.77. Let's just say you short it at the high, that's perfect. But let's just say right now you're waiting, I'm saying yes. You can initiate the short at 106.40. 107.77, that's over a point, it's 0.30. So that's just about 1.2% risk. I would even give it more, I'd give it 108.30 if you're starting your position here. Give it a little room. So that's the way it is. Okay, let's go to Jerry in the Back Bay. Jerry, how are you?
All right, how are you?
I'm well, thank you.
I'm interested in Google.
Yes.
It looks to me like it's getting overdone, and I want to trim a core position.
So,
I'm
Jerry,
wondering how to do that.
You know, there are a couple of things that I'm looking at now. Now, Jerry, you are occasionally, do you ever use options?
Sometimes, yeah.
Yeah, I know that once or twice we've kind of discussed it. What I would do in your case, because, you know, Google, these are leaders of the 21st century. This is like getting CBS in 1928 or General Motors. This is like the start of it's an evolution it's in the maturing stage of its very initial phase. Now, how do I explain that? So we're talking 12, 14, 16 years of a change in the entire communications environment. And that means that Google has been on the cusp. In their own way, they've done so many different things, and I'm waiting for them to make some kind of a package that really puts a chunk of what they've done together, YouTube, whatever it is. So I would not even want you to start thinking of, you know, changing that core position. But what I would say to you, you could do two things here, because it's gapped up in a leg D in the daily, it's leg D in the weekly chart, leg. I'm calling it F in the monthly, but believe me, this could this could recycle. This could be F/B. I just don't want to do anything early. What I am going to say to you is this is a gift. You were anticipating 3 days ago when it was at the, let's call it the 1200 level. It was under that. Or let's say the 1900 level. That you'd be looking at it today at 1251.
Yeah.
Okay, well, if you thought that there was a chance of going to 1251, then I'm saying to you that's different. If you thought, now it's getting kind of toppy, I wouldn't be surprised if even after earnings it's suddenly trading at the 1160 level. This is a gift, a 100-point gift. I'm going to say to you, if you want to take a little bit off, you could do it by buying a put. It'll probably be pretty expensive, but I would still say that is money well worth it, because you could automatically in your mind work out whether it's 1, 2, 5, or whatever number of put positions you want, and I'd get it really close. I wouldn't. This is not money that you want to take because you want to make money. This is money that you want to save money. So if you want to make money, I'd say, hey, why don't you take a fly at a 1,190 September put? This has got nothing to do with that. This is to have some kind of insurance and maybe not even have to take capital gains yet or anything on any position. So number one is, if you can buy put in the money, I want it as close as possible to moving with the price. In other words, you might have to get, I don't know if they're there right now, maybe they haven't even put them out, but if there is such a thing as a 1270 September Google put, and I'm looking at GOOG. I'm not looking at GOOGL. I'm looking at the core, which is Alphabet C stock. So if I'm looking at that, I'm going to say I want to be moving point for point to the downside as some kind of insurance, and it'll ameliorate that exact amount of shares that I would have taken off. That's number one. The other way to do it is you can make a combo of just doing some puts and taking a little bit off. But the other thing is that if you have a position that you're saying to yourself, wow, I've really done very, very well. I am totally satisfied with the gain. If I had to lock in the gain right now, I'd be happy as a clam. Then I'm going to say to you, why not take, I'm not sure 1/3 is, to me, 1/3 would be too much at this particular point. I'd rather give it a few more days, but I definitely then would take 1/4 of my position off, or at least take a portion off that says, I've rewarded myself for being patient. I've rewarded myself for being in one of the best stocks on the market. I'm rewarding myself for trying to keep in a position of a stock that is really a cutting edge, kind of a breakthrough stock for the 21st century, and therefore I want to try to keep the core position. Kind of those are the three ways I'd look at it. Maybe taking off right now is the best way for you if you feel comfortable.
So you think in the short term then it's true going up?
Hold on, I'll look at the 120 minutes and we'll do that in a minute. Hold on, we've got Jerry in the Back Bay, Boston, and the guys at 231. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're on with Jerry in the Back Bay, Boston Back Bay. We're looking at Google, but I'm also now with Amazon. Amazon is up 16. It's under the high that it made on a peak D in the Chapman wave at 1858.88.
Google.
I wanted to look at how Amazon's acting after its earnings. Very good earnings. Hasn't taken out that high of the 18th yet. Facebook comes up, what is it, in 2 days' time or something? It's only in leg C.
Tomorrow night.
Oh, is Facebook tomorrow? Wow, I'm not sure now what to say.
It might be tonight. Well,
I
it's
don't
either
have
tonight
it
or
as
tomorrow
tonight.
night.
Facebook, Wednesday. Someone will probably tell me. So anyway, I don't think it's today. It's tomorrow. So if it's sooner, it's going to be tomorrow. I don't think then maybe it's Thursday.
Amazon is like Thursday or Friday.
Amazon is still coming up. Oh, okay. So what I'm looking at here is one of them could perhaps disappoint, and the other one could just be blowout. Wednesday's Facebook day. Thank you, Jay. So I think it's after the close. So this is what I'm looking at here. Because of the 43-point gap to the upside, and right now Google is trading at the low of the day. So it's gapped up, opened at 1262.59, ran to, let me just see where the high was, ran to 1266, all round number high. I must make a note of that, 1266. Well, days, yeah. Round number high, all-time high. Okay, I'm going to make it real easy. If Google breaks and closes above 1266 in the next 3 to 4 sessions, that's very positive, and basically that's raising the base and saying, yeah, we could fill some of the gap, but the entire gap going back to yesterday's high of 1206.49 could take a while. That's number one. Number two is, in this particular environment right now, fund managers are being forced to buy the stocks that are acting really well. This is what it looks visually. And I'm also looking at volume, as I see on the ticker going by, and I see volume coming into these heavyweights on the times that I'm looking at volume. That's what I'm seeing. And that's saying to me that people still want to get into Google, but it had a huge move to the upside, so it's giving some of that back. I'm still going to stick with what I discussed before. I think that if you're able to buy a put position, that is, I can't do it right now. I should be able to, but I don't want to mess up my stuff that I've got going on. But if there is such a thing as a 12, so it hit 1260. If there is a 1270 September put, I would prefer to say, Jerry, why don't you just buy a few of those? They're going to be less expensive than they were yesterday, but they'll still be pretty hefty because it's a $1,270 price strike.
Right.
So I'm going to say, just start off there, give it a couple of days. Let's see what happens with Facebook and Amazon. And why don't we talk again either Thursday or Friday? But my plan is that I'm pretty sure I'm going to say to you, after such a spectacular rally, it really behooves you money management wise, not profit wise, money management. In other words, ameliorating some risk
Right.
rather than doing what, if you were very aggressive and you're not, if you were very aggressive, I say, you know what, this is fantastic. On any pullback, just add another 30%. This is different altogether. I'm saying, look, this is where you can start to see a little bit of an exhaustion move, some kind of a give back. Start thinking about taking something off as money management, risk reward, and then that's what you'll be looking to put back. And I feel very comfortable saying that. I feel as comfortable saying take a little bit off as I am saying to you, maybe start off with some put position in the money. So you're actually trading,
Right.
you're trading, and at some point, if it rallies, it would have to rally to 12. Let's say it's 1270. It could even rally to 1280 or 85, and you'll have a little bit of premium maybe left in the put, but at least your actual position will be increasing a lot. To me,
Yeah.
I like
Yeah,
that.
and because I wouldn't be surprised if it closes a good part of that gap after all this.
Yeah, I think
The
it
run up on
should.
top of a run up.
It should, and not only
I
that,
think
people need to assess.
I still like it long term, but.
Oh, I'm
But
looking
thank
at
you.
that monthly chart is fabulous.
Thank you very much.
Hey,
Appreciate it.
congratulations, Jerry. Great position play, and congratulations on that trade. Thanks for calling. So a couple of questions as to right away. So Intel, let me see what Intel's doing here. Intel right now is up or down? It is up a penny. So Intel is in leg C, but it's really struggling. If you look at the weekly chart, not good technicals. Monthly chart is not bad at all. So I need price movements. So Intel at 52.33. I need to see it go to the 53.80, 54.20 level, and I'll change my opinion maybe about the SMHs and say, you know what? There could be another counter trend rally. But if Intel at 52 starts to trade close under 51, that's an arch formation, and that's going to be very negative. And Intel, look, Intel, Lam Research, let's go to Applied Material. Applied Material is down today. Yeah, down 27 cents. There's the pattern that I'm anticipating Intel will make, the arch formation. So yes, I do think the SMHs are struggling, and I think they're telling us a little bit about what's going to be coming up in the next maybe month or two, some kind of a pullback. That's the way I'm looking at it. Next question is, high-grade copper. I haven't looked at high-grade copper today. Is it bouncing now? Yeah. Oh, nice move up. High-grade copper is up 0.06 at 2.81. Very important. Boy, if it didn't do that today, get above the 9-period moving average of 2.77. Actually trying to tackle the 2.81 level is just above the 9, is above the 14-period. So the 9 and 14. I like this. I want to see what gold is doing right now. I'm anticipating gold to have some kind of a bounce. Yep, it's coming off the low. I'd only call it a bounce on the 120-minute chart. No, not yet. So let's go back. Mosaic was a question. I want to look at the commodities. Mosaic's pulling back a little bit here. Would I be looking at this as a long position? I think that it has a chance of trading sideways and then making slightly higher highs and higher lows at this particular time. So at 29.13, yeah, you know, I would love this candle not to be an inverted Chapman wave Roman candle, but to be a positive candle. I must say, I'm holding off for subscribers. We're not doing anything with the agricultural stocks. We're not doing anything yet in the commodities. Remember the XLE I looked at just now? XLE looks like it's bouncing, but it wants to arch over. I just think commodities at this particular, let me look at the TRCCI, that's the Thomson Reuters Equal Weighted Commodity Index. There it is. Oh, nothing to see here, folks. I need price movement. Do I want to get the exact bottom? I always like to get that exact bottom or the exact top, just like we did with the IWM, within a penny of the top. But I don't see it. That weekly chart is just not strong at all. So I'm holding off. I'm just, at least that's the way I'm looking at it. Ford Ford is a nice candle today, up 2.10%, up 22 at 10.69. Well, I've got one segment to go. Yeah, that's a bounce. It's the FCAU, Fiat Chrysler. What's the bounce? General Motors. Hey, I'll be back. Dow's up 211. S&P's pounding up 13. That's interesting. I'll be back. After this break. Giving back in an arch formation.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
What's this email here? Just junk mail that comes out. So this guy's talking about the Millennial Workaholic Index, the data scientists at FreshBooks. 56% of millennials work more than 40 hours a week. They're 8% more likely to work 40-plus hours than those above 45 years old. 1 in 5 millennials say they work over 60 hours in a typical week, and 70% say they've worked on the weekend. 32% of millennials have worked in the bathroom. Now, I'm going to just make a statement here that is not based on anything other than gut feeling. That's all. I think millennials are staring at screens for 80 hours a week. I don't know if they are working 80 hours or 60 hours or 40 hours a week. I think it's the same as driving. When you're driving, you see so many people mentioning the den accidents are up. Yeah, because of texting and looking at your cell phone. I think distraction, and that is the issue. I haven't got any proof, just my gut feeling. I would not be surprised if millennials are looking like they're working a lot, But the actual work, I suspect they do work very hard, but I don't think it's anywhere near as much as the time they spend on the screens. That's my feeling. All right, enough of that. Dow's up 202. What am I looking at here? I'll be back a little later to be interviewed. But most importantly, we've accomplished a whole chunk of things that I wanted to look at for today, which is the Dow getting to leg D. Now I'm going to have to start thinking about what decisions do we want to make. Previous D was a perfect short. The very next day we went short. I don't know if the technicals are quite the same. It looks a tad stronger. I'll have to make decisions about this. Will Amazon and Facebook kick in higher levels so that any time you short right now, it's just a silly thing to do? No, I think this is a very select market. It can be individualized, and that's what I'm looking at. So Dow's done it. UTX has gone to leg D, what we have. I wanted that. IBB is what I wanted to see, leg D. It's done that, and now it's giving back a chunk of that gain. Oh, this is going to be a fascinating market. Weekly leg D in the IBB, NASDAQ Biotech. A lot of thinking for tonight. Have a wonderful day. I'll be back a little later. Otherwise, I'll see you right here, same time, tomorrow, Wednesday. Have a great day. And stay tuned for Steve. Stay tuned for, we've got Dave. We've got Larry coming back. Good night.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.